in helping startups, fintechs, and the ecosystem in general in building more resilience and relevance and sustainability in their business models and in the way they are creating impact. Also, the lab is now in its fourth cohort and beginning to look at uh, applications or starting to talk with founders who are equally passionate about serving this LMI segment, who are passionate about the financial inclusion initiatives by the government, and who have a product idea, more than an idea, a product at an MVP stage or even beyond that, and want to be accelerated through one of the best accelerators in the country today. That is the FI Lab and the CICO team. So before going on to the panelists, I would like to just highlight a few things that we have noticed during the COVID times. And the panelists will be telling us, delving deeper into this and telling us more about the recent trends that they are witnessing. And based on that, we will have this discussion go into round two, where we'll also ask them about what they are seeing currently and what should the startups, fintechs in general, and the ecosystem should be doing. So as you probably know, when we started out with this unfortunate incident of lockdowns and the COVID-19 spreading in India in March, we saw a very shocking trends. The customer onboarding across all the fintechs except InsurTech and a few agritechs had almost reached nil. The repayment of loans due to the moratorium and other reasons was going down was actually sinking, and the defaults and delinquencies had risen to almost 25%, affecting all the lifestyles, all the livelihoods, especially in these LMI segments. We also saw savings dip initially because people were concerned about cash in hand, and they wanted as much of it as possible with their, with themselves, because the work had stopped, the gig economy had been affected. People were migrating back to the native places, and they had no livelihoods or no earnings during that time. We also saw a bit of an upsurge right away in insurtechs, and people getting more conscious about their health problems and taking some steps which were never seen before in this segment, actively to getting some insurance and getting some counseling around that. Having said that, I would now like to go with the people who have been there, who are the experts, and who have very holistic opinions about the segment they are serving and the products they are making. So let me start off with Anshul Khurana and ask him, Anshul, how has your journey been right from the start of your startup idea towards reaching where you have done today, and how has it been supported by others?
Sure. Thank you, Anshul. So let me start with a little bit of a context around what we do, and I'll sort of link it back to the kind of supports that we've received from the lab around that. So Untitled is a financial well-being platform for blue-collar workers or low-income workers, as they're referred to. We work with employers and gig platforms to enable access to credit as well as non-credit products, along with financial counseling and literacy for workers. And the core idea is to help workers, live better lives, and do well from a financial livelihood standpoint, grow over a long period, and at the same time we help platforms engage and retain their workers better and see a significant impact on the kind of output that they're able to generate from it. Coming back to the kind of help and supports that we've received from the labs, we were very early into the lab when unfortunately COVID hit, and just the association with the lab has sort of helped us survive, so to say, this phase better. I think the biggest plus with the lab has been that as COVID and as the impact of it started happening, we see a lot of activity around with the policymakers, regulators, startups having to do things things, on the go, making very, very quick changes in terms of the kind of strategy that they're adopting. And I think that's been the biggest benefit, to be able to be connected to the ecosystem that the lab has created, understanding what is going around, what, other startups are doing, how the policymakers are responding, or the regulators are responding, what does that mean for us as a startup. And that's been the biggest benefit. We've been able to draw on the experience and learnings of that the lab has had, and the ecosystem that they've been able to connect us with, while this period has been the way it is. We've also looked at using this period to work on a couple of key assignments in the lab, and using the resources we had available from the lab itself. And we've used this period to do a strategic business planning workshop with the lab itself, trying to set up goals and objectives for ourselves, set up milestones on what we are planning to do, and strengthen the value proposition that we offer for the employers or the gig platforms that we are setting up with. So we've used this period to strengthen what we are offering, both to workers who come on board and work with us, as well as the employers that we associate with. And we've been able to use the learnings of the lab that have been aggregated over a period, and implement to sort of what we are doing at this point. But I think the biggest plus in the kind of period that we are in has been the fact that we've been connected. We've been able to quickly draw on what's happening in the entire ecosystem, and implement that to our specific use case, and ensure that we are able to survive this better, and thrive as it goes along from here.
Thanks, Anshul. Just one question to that. What changes have you seen during these times, during these COVID times, based on your offerings and solutions to the LMI segment, the blue collar worker segment?
Sure. So I think the the early period, of course, was people trying to figure out what's happening, both employers trying to figure out what's going on, and what's the future is, even the short term and the medium term future is going to be. But post that, over the last 2 to 3 months, we've actually seen a positive change in a way, because we see employers or platforms now worrying about the financial lifestyle of the individuals that are sort of working with them. And there is an increased impetus on workers having insurance, workers getting access to credit, and all different products that we are speaking about, because they understand that they are the ones who are coming into our facilities and working, and their security and safety is a very, very important element of the growth that they will have to they see for themselves as it goes along. So that's been a positive change, and we've seen that happening over the last 2 to 3 months, where we've received a bunch of inbound inquiries of employers wanting to extend financial well-being or financial wellness services to their contractual workforce, especially because they are the ones who are most vulnerable to the kind of effects that we've seen in with COVID coming in.
Great. Thanks so much, Anshu, for those insights. I'll now move on to Ashi Shannon, who is the CEO of World, and ask him the same question. How has his startup journey been from the beginning till now? What changes has he seen on the ground during these months? And how has he been helped by the ecosystem in general? Over to you, Ashish.
Hi, everyone. I'm Ashish, co-founder of World. As Anshul mentioned earlier, so we are working in the agriculture fintech segment, and we are one of the few startups in India who are working in the post-harvest finance segment. So typically, we talk about agriculture credit, agriculture finance to SME, small and marginal farmers. But it's a fact that in India, 90% of the farmers are unable to get post-harvest finance. So everybody, I mean, the larger farmers, not the marginal farmers, get agriculture finance crop loan. But when it comes to completing the cycle gets broken just after the harvest. So that's the problem we are trying to solve. And it has been a fantastic journey. Since last 1.5 years, we have been in the, since we launched World, it has been almost 1 year since we launched our product in the market as well. So, but when we came to Financial Inclusion Lab, that was in February, and what happened after February, everyone is well aware of that. That was the time when we had just started working with a couple of pilots with a couple of government organizations and government sector banks. And all of a sudden, COVID struck. So the major, it has been a mixed bag since then. It has been quite a fantastic journey on one side, but at the same time, COVID has also restricted our growth in number of places. However, what has been really helpful there is the financial inclusion / support. One part, as I mentioned, we were quite early in our journey in terms of having been in the market with 4 to 5 years, 4 to 5 months after the product launch. We went to FI Lab, and what we learned there, first of all, how to sell to who is the right sector for us. And then Financial Inclusion Lab also did a TA analysis for us. Who are the customers? Whom do we reach? Whether the customer segment we are really thinking of, are they approachable? Are they really looking for finance? Or if they are looking for finance, does it make transaction cost wise really beneficial for them or not? Are they in a position to avail that? So all that was done by Financial Inclusion Lab, and that has really been helpful. That has helped us focus where to go and where not to go, what to do and what not to do when we are talking of reaching the end customer. So that is the major support we have received in terms of Financial Inclusion Lab. Along with that, certainly the experience being part of the ecosystem where all the last three cohorts of Financial Inclusion Lab, all the entrepreneurs are there. We have been networking with them. We have been gaining from their experience in their different sector. We have been gaining from how they have been doing, for example, loan to new to credit segment. Now 40% to farmers are new to credit. We have learned from them how they are giving loan to new to credit segment, what to do from them, how they have done it for the SME space, and what are the lessons which we can take to agribusiness spaces. So that has been the ecosystem of the previous founders who were part of this network has been a really big help for us during this COVID period of last 6 months. That has really helped us in thinking where to go, what to add to our offering so that it really appeals to the customer segment. That has been there. So it has helped us. So when we started, when we just come out of the Financial Inclusion Lab bootcamp, we were just doing pilots. Today, we are present in 1,250 warehouses. We have already created electronic warehouse receipt of more than 3,000 crore rupees. We have already given digital loans, which we started a couple of months back, of more than 5 crore rupees to this segment. And that too during the COVID period where it is impossible to meet anyone. So that has been the help we have received. Really thankful to that. And one more thing, which is a smaller part as compared to the non-tangibles which you receive, but a smaller part is the tangible support which comes in the form of small investment. And really speaking, it has helped us to extend our runway for last 6 months. That has been supporting us. So we are really thankful to FI Lab for that as well.
Thank you so much, Ashish, for those kind words. And all the best to you. Anil, coming to you, because you have a broader feel about the ecosystem from many touch points. What has been in your experience, the movement that have happened during these last 6 to 7 months in the ecosystem?
Thanks, Anshul. I hope I am audible.
Yeah, you can lower your voice, higher your voice a bit.
Better? Okay, yes, so I think we heard two of the startups talking about their journey and how they basically are, I would say, trying to survive during this COVID period. So because we need to talk, I'm supposed to talk about the ecosystem. So let me talk about the ecosystem from 2-3 perspectives. One is about all the macroeconomic picture, what's happening in India. And second is what's happening on the regulatory landscape. And third is where the money is going to come from. So it's all about the investment ultimately. So if I look at the macroeconomic picture, so I'm just narrating a bit of sequence because it helps us to connect the dots. So if we look at early 2020, I think everything was going pretty well, though of course we were seeing a slight downturn in the economy, and everyone was going gaga over what India was doing and what India was aspiring to do. And everyone was saying that in next financial year, that is financial year 21, which is the current financial year, India's growth is likely to be somewhere around 5.8 to 6%. But we know that COVID started hitting us, and even before COVID started hitting us, it seems that global market was showing some fissures, and ADB started seeing that India is likely to slip from 5.8 to 4%, and that is something that we have already seen. Slowly, as lockdown started, everyone started downgrading the growth forecast. Initially, it was about 3.5% by S&P, and then Moody's said that India's economy won't grow in financial year 2021, but expected a bounce back of something like 6.5% in financial year 2022. And surprisingly, like as pandemic was spreading too fast, too far, most of the economists were talking about the contraction. And like Moody's have downgraded several countries, including India, and finally, in last few months, what we are hearing is a contraction of something like 10%. And today, in today's newspaper, also you can see that World Bank has spoken about it. They are talking about somewhere around 9.5%. So it seems that depending on like how things unfold from now onwards, the contraction would be there for sure. It may be 10%, it may be around 8%. Let's see like finally what number comes out. But what the interesting thing that we are seeing some green shoots now. And these green shoots are basically we are seeing some I would say indicators. So few of those indicators are, for example, GST collection in the month of September was more than what was there about a year. Then we are seeing that rail freight has really picked up very well. And if you look at the power consumption, that is another proxy for indicators. And like economists look at even the lighting in the night in some of the countries and some of the states, and see that how our economic activity is correlated with that. So there is a strong positive correlation with that. So it seems that probably worst is behind us. We may, like the contraction which has happened, it should start reducing, and we should be starting the upward journey. But of course, it's not going to be as simple as numbers speak about it, because the kind of economy that we have by the end of FY20, I think probably will take at least 2 to 3 years before we come back to the same level. So this is a new normal, unfortunately. So in the new normal, the other problem that we see is that it has impacted low and middle income people disproportionately. So it may have impacted all of us, but not necessarily in the same measure. So that is very important as we design the solutions or as we work on that. So that's one part of this. The second part of it is all about what's happening on the regulatory front. So on the regulatory front, we see that a lot of issues were there, and Anshuli pointed out that because of COVID situation, there was this customer acquisition activity has come to standstill for many of the startups. And there were some enabling provisions, or I would say disabling provisions around that, why people are not able to onboard them. Because as a fintech, in any case, like Indian ecosystem in terms of financing is all regulated. In the sense, if you are a saving fintech, then you need to have a tie-up with, definitely you need to have a tie-up with a bank, which allows you to basically raise deposits. Otherwise, you are not supposed to raise deposits. If you are a lender, there's another set of problem in the sense like either you are an NBFC or you are basically tying up with the banks or NBFC, those who offer the loan. So they enforce their own terms and conditions. But in any case, you need to acquire a customer. And with a lot of restriction in the market, what we see, unfortunately, one good thing which has come into the market is video-based digital KYC. So some of the startups or some of the organizations, they have started that. But my personal experience has been that because I have also been onboarded I was asked to get myself onboarded for some of the things that I wanted to use during this lockdown. Through the digital KYC, it wasn't really good. And secondly, in many of the cases, they said, in addition to digital KYC, you need to sign the paper. So ultimately, we are back to the same situation. And if you look at the payment, I think that has been a pretty interesting story. Insurance has been a pretty interesting story. But if you look at all these things, there are three things that we are seeing actually from if I combine what's happening in the cash market, digital market, and what's happening in the banking market. We see cash is increasing. In the sense, when I say cash, means currency in circulation is increasing. Continuously it is increasing. Second thing, if we see the deposit in the banks, it is increasing on continuous basis again. So it means people are having cash as well as they're keeping money in the bank. Third, very interesting thing is on top of that, digital transactions are also increasing. So it declined, but again, there was a V-shaped recovery. You see UPI is at the all-time high. You see BBPS, there's a new normal for Aadhaar-enabled payment system, which a lot of people use in the rural area for cash requirement. This has also touched the all-time high. So it seems market is poised for a new normal. I don't think that everything would remain more or less same, but it is definitely going to be a new normal. And hoping that there is no large second wave, which may again set us back by a few more months, and rather, like if I really look at this customer segment, few more years. And if that doesn't happen, I think there is some silver line. That's the second part. Third part is that if you look at how investments are taking place, our analysis as an organizations and our understanding in terms of like because we speak to a lot of startups and thanks to their intelligence, we realize that market is not as great as it was. But the numbers say otherwise. As numbers are like they camouflage a lot of other things. So if you look at some of the statistics which are coming out, it says that there is a 60% increase in first 6 months of funding from Jan to June 2020 as compared to what happened a year before. Seems paradoxical, but no one is basically willing to share the data that how it is going into which organization it is going. But on broad level, this is what we are seeing. There are few organizations which are very, very large and they are cornering almost entire money. And this is something actually, as Anshul mentioned, while we were doing the design of the lab or we are trying to understand the landscape, this is something that we have seen earlier also. It's unfortunately the same trend continues. And the other trend that we see is that if you see where the investments are happening, it's typically happening in three metros, Delhi, NCR, Bombay, and Bangalore. I think 80 to 90% of the activity, they are just concentrated on that. And let's see, because people are talking about that this is too early to say that, because most of the commitments must have been made by March and they might be just in the process of this, putting a, I would say, formal wrapper around it during the next 3 months. Hence, we are still seeing good activity, but we are not too sure whether this investment in startups would continue the way it was there earlier. So hence, it will become very, very important for us that we are not only resilient, but also relevant. So if we have both the things, probably it will make sense for us, or it will make sense for the investors who put their money on our ventures. Yeah, I'll stop here.
Thanks for those thoughts and those perceptions. I'll move on to Sandeep now. And Sandeep, as you head the lab and look into its operations, startups, and how, according to you, has the lab, what have been the learnings for the lab, for the startups, and for the general acceleration ecosystem in India, according to you, during these last 5 or 6 months?
Sure. Thanks, Anshul. So, we've run 3 cohorts of startups in the Financial Inclusion Lab so far, and each cohort teaches us as much as we mentor them, right? And in the last few months, even that has accelerated significantly. We have learned a lot more about the needs of the customer and the critical challenges that the startups typically face. But more importantly, what we have learned is a way to, I guess, solve for those challenges together, right? And that really is something that we have figured out. We are that much closer to coming up with an optimum model for acceleration, if I can say that, right? So if I look at the key challenges and learnings we have had, right? First one, of course, was the inability to travel, right? When we started the previous cohort, we were like, I mean, we both had discussed about that, how much eager we were to actually go on field, talk to customers, and work for the startups. But then suddenly, March came in, and all those plans just remained plans, right? But then what we definitely did was we adapted, right? And we had to build a virtual model of engagement. And thanks to startups, and founders like Anshul and Ashish, we were able to come up with a model, and slowly improve upon it, right? I think what we also did during this period was even leverage MSC's expertise, some of its previous studies, right, to give those insights and inputs, to startups, and that really helped us a lot, right? Especially, because we could not make those travels. Another challenge that we faced, it was the prevailing environment itself. Things were so fluid, regulations were changing by the day, behaviors are changing. There was so much risk, and I'd say a lot of uncertainty involved in this. And like Anshul mentioned, what we did as a result was that we got some really capable and experienced people as mentors for these startups, right? Which meant that startups were made aware of what is happening at both the ground as well as the higher levels, so that they are able to adjust themselves to the environment really well. It's extremely important to be agile, and it's situations like these close a lot of doors but also open a lot more. It's important to understand where to go so that you continued developing your startup, right? And so that is something that was a key learning for us. Next, I guess one area where we suffered badly was on forging the right partnerships, right? We at the lab, we believe that especially when it comes to catering to this low and middle segments, startups should have those necessary partnerships in place which make their unit economics work, right? However, with the situation that was prevalent, while folks were very much willing to connect and talk and discuss possibilities, the actual on-ground implementation, had to be postponed until situation came back to normal. We have now seen that things have started opening up, and but then the only option there was to wait, right? So these were some of the challenges. Investment challenges remain, but luckily we have that grant component, because of which startups do get that extra runway, in a way to actually manage their operations and figure out maybe the right business model. But yes, investment is something that we are keeping a very close eye on. We have definitely facilitated a lot of connects, but then how many of those connects go on to become, investments is something that we are yet to monitor.
Great point, Sandeep. Thank you so much for that. Before I move on to the next round and ask you more pertinent questions for the startups, I just want to highlight a bit more from the report that during these times have been very tough on our startups across India. And like you mentioned, and like Anil also mentioned, disproportionately hard on the LMI segments as well. Because of that, we also saw, a majority of our fintech startups who are serving the segment, only being left with 3 to 4 months of runway, and pay cuts across the board, right? Founders don't take money as is, but even they couldn't pay this, the staff the right amount of salaries, and they had to do a lot of sacrifices themselves to kind of maintain the, keep the lights running, so to speak. And also, I think a very major issue that you have pointed out here, Sandeep, is that I could, at least for myself, could get the right difference between impact investment and the venture capitalism that is there, and to our donors and other folks who are into this social impact segment. I could actually sense, and my teams also could sense, that the patient capital that is provided and the help that is provided tangibly and non-tangibly during these times goes for, helps the startups a lot, and they were really very thankful with the guys who are with the right kind of investors. So I think that also matters a lot. It's not just investments are growing in India and there is a lot of coming in, as Sunny pointed out. Everybody's saying that, but on the ground, the realities are much different. And but now this differentiates the actual impact folks to the folks who just want to earn money from both ends. So that was a big revelation for us as well. And there were also some silver linings in terms of other segments within fintechs that are doing well. Insurtech has been a sector that has been going up in that trajectory. Agritechs have performed well across the board, and due to the new government regulations and the new initiatives coming in, for example, the token network that's coming in, that's going to be implemented now by many of the startups, account aggregator systems. I think that this will be a big boost to the fintech ecosystem in general, to the startups also, and other infrastructural fintechs supporting domains, for example, cybersecurity, cryptocurrencies, and even health tech and med techs are going to leverage the strength of these fintechs in becoming more robust and more forward-looking than they were ever before. On that note, Anil, I'll come back to you on this point and ask you, what would be your top advice, tricks, tips, as you would call them, for the startups to navigate through this pandemic and the challenges that are posed both within themselves and for the ecosystem in general, from the ecosystem in general?
Thanks, Anshul. I think this is how I look at it, that most of the startups that we are working with or are connected with, I realize that most of them, they already know what is that they should be doing or what is that they should be, what is the way forward. I think they are fairly mature, they understand the market even, and I think there is probably I'm not required to give any specific advice to them. Only couple of things that I was just want to say on the basis of what we are seeing on a broader ecosystem. First is that what I always continue to say is that resilience has been there for many of them, and they know that this is they need to be resilient to sustain. The second part of the resilience matrix, I would always say, is that relevance. So what was relevant earlier may not be relevant now, because I see that, for example, Anshul also spoke about it briefly, probably in touch that upon again, how you need to change a bit. So that change a bit, make sure that you are relevant in the new normal, because lives have been impacted severely. People are not going to behave the way they were behaving earlier. Despite all the assurance by the government and governments, and despite all the things which are happening all around us, we are seeing lesser and lesser infections. Still, people are holding back. They are really not spending money. So this new normal will have to see until we come to a point where people are back to the same situation, which is going to take a lot of time. And I don't think that many of the startups will have runway to sustain till that time. So that's the reason why this relevance becomes more important for many of them. In addition to that, I would I always take a few words of advice from one of my colleagues who has written very extensively on that, and he compares some of these things. What people, if like someone like say Bear Grylls, if he goes into the jungle, how does he survive? So one of them, actually, couple of them, I'm very interested. I'm intrigued, and a couple of them I want to share with all of you. One is that typically in that kind of situation is that you need to preserve your supplies, because supplies are limited and you really don't know how long you are going to take before you get out of jungles, get out of the woods. So basically for our world now, the time is that how do we ensure that we preserve our cash, and how do we extend our runway? How do we cut down actually our unnecessary expenses? And of course, Anshul, you mentioned about that. It means there has been across the board pay cuts, and unfortunately the problem in the market would be that if you resort to pay cuts alone, you lose rest of your people, and people are key ultimately. That's a second piece. Let's see, if you have the right team, if you have the right people, there are high chances that you bounce back. If you do not have right team, right people, there are very limited chances. So these are couple of things which typically comes in my mind, and that are very important. And another thing is that there was a till recently, till I would say 6 months back, every startup would look for a large piece of funding at their own terms and conditions. They would always say, this is how I want to do it, this is how much I will dilute, this is the only thing that I'm going to accept. Unfortunately, in this current situation, probably we do not have that much kind of bargaining power. So in certain situations, we'll have to loosen our guard. It may mean a bit of compromise, but life is like that, unfortunately. So it has never been equal. So if when the ecosystem was really rising, they were trying to dictate the terms. When it is the other way around, someone else will dictate the terms. So we'll have to. I think the art of the life is all that. How do we navigate? How do we manage through that? I think these are some of the things that I want to say. And let me again say that all the startups, all the founders are really matured guys, and they really understand their businesses. They really understand the ecosystem, and I'm sure that they are and they will continue to take the right calls.
Thank you, Anil. Thank you for those words of wisdom. Sandeep, let me ask you the major question here, and that's the topic also. How is our lab priming or going to prime startup for this new normal? What are we going to do?
Okay, so a lot of I guess background has already been given by all the panelists, right? So let me just try to build up on that, right? So if you look at the areas of mentoring in some sense for early stage founders, so broadly I'll define 4 areas of mentoring, right? One is around managing a startup, so it could be any startup. Second is around building market knowledge, which is both the macro as well as the micro, understanding your customer better, and also understanding both the conceptual as well as practical aspects of the market, right? It's important to know both. The third is around product development, right? How do you actually build your solution? What is the right technology to use? How do you make it scalable and the like? And fourth is around fundraising. So when we look at these 4 broad aspects, the program in a way is designed so that each one of these areas, in each of these areas, the founders are given the most effective training or mentoring that can be given. That's in a way how the program is designed, right? Starting with that, of course, I will again come back because this is a very important part to the concept of resilience and relevance, right? It's very clear now, from all our experiences that if you don't have a strong value proposition for your target customer, the customer is not going to buy your product. Very clear. And the case is a lot more severe now than it was earlier, right? People are not really just willing to, even spend their money on anything, that they don't need, so to say, right? If you are not making money in your business, you are going to die. Very clear. Investors are also keeping an eye out for this. It's not just about blind growth. You really have to show how you are making money in your business. So drawing from this, I'd say our first focus essentially will be on validating the product market fit, right? With all these change circumstances, it's very important for you to understand how the need of the customer has changed and maybe how you should tweak your product or your entire offering so that it relates to the new normal, right? And you have to do it. The product market fit should be both sustainable and scalable, right? And once this is established, then you start exploring growth strategies, which again includes fundraising, but is not limited to that, right? And I think just like we did it for the 3rd cohort, even for the 4th cohort also, we will be extensively leveraging the experience, and the knowledge that exists within the team as well as the network to enable this to happen. Secondly, it's about the boot camps, right? And we typically started our engagement in a way with the boot camps that we had at IIM Ahmedabad. very likely that these are going to be virtual now. So in a way, we are also designing the pedagogy so that I guess it's slightly different and it's more fit for virtual, right? We don't want the the sessions and the training to be less effective, but the only way to do that is by redesigning it so that it can be effectively delivered virtually. In fact, the good part about having virtual sessions is that we can get a lot more people, practitioners, to actually talk to the startups and give them inputs. So all of these are going to be leveraged, when we are actually mentoring these startups. Third, in fact, we have just about launched a portal to showcase our startups. While earlier the showcases typically used to be, in person, at different cities. Now, even this is going virtual, which means that having a virtual showcase, a portal kind of thing, also means that we are able to reach out to a lot more investors and market access partners for these startups. And we believe that over time, the utility of this portal is only going to increase. There are a lot more initiatives that we can plan around this portal. Definitely looking to use that for both even the previous as well as the current cohort we have. Finally, when it comes to investments, because I understand that for many founders, this in a way is some sort of validation that they're building something meaningful, right? So while we do provide about 25 lakhs for each startup in the cohort, so that they can do all those experiments and validate their business model. The program is not just limiting itself to that. The way we have designed it is that at least some of the startups which are showing promise in terms of both growth as well as the impact that they are creating for these low income populations, we are there to provide them with additional capital and technical assistance from MSC to enable them to grow, right? So it's not. It's very important to think that this program is not a one-off exercise that we are doing and then letting go. The idea is to have a more continuous engagement, keep looking at opportunities. CICO, being one of the country's leading incubators, will always provide that opportunity to continuously engage. We have a team that can provide continuous portfolio support. We have networks, we have all those engagements that we keep doing essentially for startups. Ultimately, CICO, the reason for its existence is startups, right? And we believe that both within the program and beyond, there's a lot more that we can offer to the startups now more than ever. Yeah. Thanks.
Cool. Thanks for those thoughts. Moving on to the startups themselves, Anshul, Ashish, a few parting thoughts about where you are today and what's your state of strategy to move in the next 6 to 12 months. I mean, with all these hindrances, impediments, but also encouragement and support from all of us here and the ecosystem. Ashish, if you would like to go first.
Yeah, sure. So as I mentioned earlier, COVID has been mixed bag. It has helped us in.
Could you higher your volume a bit?
Is it good enough? Is it good enough?
A bit still more.
Okay,
a bit
I
still
will
more.
speak a bit louder. Okay, yeah. So as I mentioned, COVID has been a mixed bag for us. Mixed bag in the sense that what we were doing, we have been able to strengthen them there in that position. That is the state of Maharashtra. Thankfully, we were in agriculture sector, which was not as affected by COVID as the other sectors have been. And all that has also helped to a certain extent that people during the COVID time, even to the level of farmers, have realized the benefit of digital transactions. So that has helped us strengthen ourselves in the state of Maharashtra. But going outside of Maharashtra was a bit, rather it has been very difficult. It has been difficult to meet people. It has been difficult to forge partnerships during this period, especially at the B2B segment where we are working. So hopefully after now we are seeing, as Anil mentioned, that green shoots are emerging. Similarly, people who were more focused on containing the COVID are now looking at how to that the containment part has been more or less done, or it has been formalized. How do we grow from here? How do we take it to the next level? Similarly, the government of India came up with several initiatives. They launched Agri Infrastructure Fund of 1 lakh crore rupee. Farm bills came, which are directly affecting how we are doing business. So after the farm bill, we have the regulatory clarity on what happens to the commodities which are stored in the warehouse. Can they be sold in the warehouse itself? So that is going to be a major thirst area for us. We have just finished developing our trading platform wherein the farmers can trade their commodities. Whatever is stored in the warehouse can be sold in the warehouse, irrespective of moving it from the warehouse again to a mandi or something like that. So that plus so the trading platform and expansion to the new states, other states other than Maharashtra is going to be our first areas. We are hopeful of, we already, as I mentioned, during this last 2 to 3 months, we did around 5 crore of digital lending. By March, we are targeting 100 crore rupee to go to farmers, FPOs, and this agriculture community segment altogether. So that will be the major first area. Hopefully, we will be able to help the farmers with the trading platform as well. And of course, the lending is certainly going to be helpful for them because the essential idea behind what we do, warehouses, seed finance, is not to lend money. The essential idea is that when we lend money, the farmers are able to sell their commodities at a later stage instead of selling during the harvest period when their when the commodity prices are quite low. So that is what the impact we are trying to bring by using this entire platform. And hopefully we will be able to touch the lives of more than 5,000 farmers during the next 6 months. So that's
Impressive,
the
Ashish. Impressive, very impressive. Thanks, Ashish.
and certainly
Anshul,
CII's help will be required there and expanding as well as in the support on how to, because we have not done that sort of a scale ever. So how do we do that at a scale level? Yeah,
great.
thanks.
Thank you, and absolutely. Anshul, over to you.
Sure. So similar to sort of what Ashish mentioned, the idea for us, of course, will be to continue to expand the platform to a larger base of workers that we are able to target over the next 6 to 8 months. The idea is to reach a base of about 1 lakh workers and also expand the product bouquet that we have. We've seen some interesting new use cases emerge, especially around lending. We've seen a move towards gig segment and the kind of support that workers need in starting off with the gig segment, in financing equipment that they need access to. It might be a bike, it might be other kind of equipment that they sort of need access to. So there are interesting new use cases emerging around the products that we can continue to expand to and include in the bouquet to ensure that we are able to take care of a variety of requests that sort of come into to our system. We'll of course continue to sort of build our tech and data capabilities. These are two key elements that we will need a hang of and ensure that are fairly developed for us to be able to reach the kind of scale that we're talking about. And I think the one key change that has been there for us from pre-COVID to now is that we're looking at building digital competencies around delivering financial literacy and content around that. Right, one of the things that we thought will sort of be physically delivered before on sites, with workers. We are now looking at ways as to how we can digitally manage those and ensure that we have the same kind of impact or more. We will, of course, continue to, expect or look at the lab support in some of the key areas or challenges that we face around the key components, especially around tech and data capabilities that we're looking to build. And, as we go along, we do think that, the changes that have happened over the last, 3 to 4 months around, policies and regulations will continue to take place over the next 6 to 8 months as well, till things stabilize more. And just to ensure that we are in line with the changes that are continuously happening and we build competencies that fit those changes, will be another key sort of expectation that we have from the lab, and we'll continue to work with the lab to get the understanding that we need around it. So that's essentially, what we are looking at doing, Anshul, over the next 6 to 8 months, and we'd continue to work with the lab on these key elements.
Great, Anshul. Thanks for those plans, ideas that you shared. Thank you, panelists, for your thoughts and your tips and your perceptions of the current times. I would like to now open the floor for questions. And as we have told everybody, people have posted some questions already. And if you are still, wondering about the situation and how will you fare or how will your friends fare in this scenario, especially from the fintech point of view, please feel free to post questions. We'll be taking it for the next 5-10 minutes again, more. While that happens, let me put up the questions that have already been posted. So I'm just going through the questions posted there. So the first question is by Govind Raj. He says that we have applied for FIL for the lab. When will we know the results? So Sandeep, would you like to answer that?
Yeah, Anshul. So I think for all those who have already applied and submitted their applications, right? I think within the next couple of weeks, we will update them of the status, right? The evaluation is such that it undergoes a multi-stage evaluation. So I think we expect the first set of evaluations to, in fact, they've already begun in a way, but over the next couple of weeks, we expect the first stage to be done for all the applications received so far. So I think you should hear from us sometime next week or the week after that, but no later than that.
Thanks. So the next question is by Samveer Sahu. Although it has been answered by Ashish in the chat, but I'll still post it here for the larger audience. Having seen the traditional financial structure affected during COVID, how well have the fintech capitalized this situation, and which sector or area has been the most successful in this regard? So any one of you can take this up. Sandeep, Anil, I see Ashish, you've already kind of given a clue for it, but if you want to speak that out again, absolutely.
Maybe Anshul, you want to respond. Anshul Khurana, do you want to respond based on your experience? Because I think that would be it.
Yeah.
Sure, of course. So I would say in terms of what has worked really well, of course, the payments segments have done well. You would see that from some of the UPI numbers that have sort of recently come about, and of course, Insurtechs is another segment that has done very well. Digital lending as such has, at least for the last 4 months, struggled a little bit, so to say, because of a lack of clarity around regulations and NBFCs trying to figure out where things are going and trying to hold on to sort of the leverage that they have and ensuring that they will look at expanding that once they have a greater clarity around it. So in my view, I think the most successful segments have been payments and Insurtech. Those are the segments that have done well. WealthTech to a certain extent has gained some prominence, and some of the traditional some of the startups that were in that space have come to the fore and have started doing new products to ensure that they're able to take care of the kind of increased demands that they have. Digital lending to a certain extent has struggled, but I think that's a very short-term view at it. Over the medium and longer term, I think COVID will have positive impact on the kind of impact that even the digital lending sector have had. So there have been a few segments that have been successful, and a few others that are sort of still trying to figure out how things pan out before the more focus comes onto those segments.
Great, thanks. Anybody else who wants to ask?
Yeah, if I may add. See, actually, I think Anshul Khurana already spoke about the overall impact across, say, different types of fintech. Probably on lending, let's look at it slightly wider. If you look at it has not only impacted fintechs, it has rather impacted the banks also. That's the reason why you see that balances in the banks are rising. And of course they are not able to lend, and the lending is at its lowest. And there are several reasons for it. Fundamental reason is that no one knows for sure that how it is going to evolve, because we know that there is a moratorium which was going on, that there was a court case which was going on, which was on interest. So government has also come out. Government has given an affidavit that probably they are going to waive or they are going to take care of the interest on interest, particularly for ticket size up to 2 crore, and that too for very specific type of segment. So I think whole lot of confusion is there in the market, in the minds of the borrower, in the minds of the lender. So, but having said that, since even the court proceeding is in advanced stage, and we hope that the committee which government has set up, they also submit their report and court also gives the verdict. So hopefully, if not very early, probably by end of this month, we should have at least and clarity from the environment side, from the regulators and the policymaker side, that this is what is going to happen. And post that, we'll have to see that how market behaves, because there are different estimates, frankly speaking. And even RBI has estimated that if basically NPA increase beyond a point, it's quite possible that it may wipe out balance sheet of some of the public sector banks. So that's fear. But there have been times and there have been situations or occasions when market has proved most of the policymakers or economists wrong. I'm hoping that people just come out and make sure that we don't see that much of I would say friction in the market or that much of stress in the market, and it would work. Actually, it should start working from November onwards. And there is another very interesting thing that we see in this market. We are into festival season almost, and this is the time when we expect the highest demand. And if it is not picking up even during this time, then of course, then I think probably we have winter days ahead.
Thanks, Anand. Thanks for that. Sandeep, Ashish, any thoughts? One-liners, two-liners from you guys?
I think it's good for Ashish.
Yeah, Ashish. Actually, the next question also is quite relevant to you, so I was not pushing it too hard on this one, but go ahead, Ashish. Can't hear you.
So better to take up the next question.
Okay.
Right.
So yeah, just to yeah, I'll put the next question to you then. Sandeep, do you have any point on this particular question?
No, actually, it's mostly been covered.
Okay, great. So just one more trend that we are noticing is everybody in the fintech are trying to diversify their portfolios, and this is something that is at a more advanced stage, maybe in Indonesia or Vietnam. The super platforms are like taking charge now. They're adding more services to them, to their own portfolios, and mergers and acquisitions are happening a lot across the world, especially Southeast Asia. And that trend could come down into India, which means that the good fintechs, the ones that are shining, will get amply rewarded, and the ones which are not scaling up to that mark might just get fizzled out. Just one thing. The next question is by Shankar, and he's asking very particularly about a cryptocurrency called Vajra. When will Vajra cryptocurrency be launched by the Indian government? They are creating a hardware, Shankar's team is creating a hardware wallet for cryptocurrency. And he's asking, is there any partner program which is active for the Vajra blockchain platform? Ashish, I just thought you would be the best person to answer it first.
So already answered this, by the way. So Vajra was an initiative by NPCI. It's not from the government of India. NPCI is an independent body, by the way. Secondly, Vajra was the initiative. The idea was to bring INR payment system on the blockchain. It was not related to cryptocurrencies. In India, cryptocurrencies are not payments instruments, not recognized by the RBI per se. So there is no question of Vajra coming up as a cryptocurrency platform altogether. But even Vajra has largely been in limbo. A white paper was published by NPCI, and after that, nothing much had moved there. It looks unlikely that right now there will be anything which will be happening on that front. On the hardware wallet part, it is more suitable to cryptocurrencies. I will suggest that instead of waiting for government's partnership, you may talk to some of the cryptocurrency exchanges which are working in India. So perhaps yesterday, Unocoin got funded by Tim Draper. And before that, CoinDCX had got funding. They are working well. So these are the exchanges. Perhaps you can talk to them about partnering on this hardware wallet, which you are trying to create.
And you can also apply to the lab, and we can, wait in in terms of what you're offering and the comparative, a pool of applicants that are there, and we can take a decision like in that context. Coming on to the next question, this is by Tenzin Verma. He's asking, and this is open to anybody in the panel, considering that things are looking up and we expect to be able to cope in a significantly improved manner by next year, would it be prudent for organizations to bide their time and keep ready for an improved climate for business or entirely redesign their business strategy for a new world? And he thinks part of this question is how different you see the ecosystem being post-COVID. Either of you. So Anil, because you are the ecosystem expert, what are your initial thoughts on this question?
So I think maybe like Ashish and Shukrana, they would like to say more about it based on their experience and how they're looking at in terms of the next 6 to 8 months. Part of it is already covered. From my perspective, this is how I look at it, that there would be some changes. It's not possible that we can continue to do the business the way we have been doing it. It's not only because of COVID. The other thing is that simultaneously a lot of policies have changed. A lot of policies have changed. For example, Ashish mentioned about a lot about the farm bill. I think farmers are up against we can say Punjab and Haryana. But in most of the places, farmers would be very happy doing that. So you have basically we have made the rules of the game completely new. There are fresh rules, and we need to play by those rules. Say something like that, say video KYC, which wasn't there earlier, and of course it was there on the papers. RBI came out with that, but hardly anybody was using it. But the COVID situation has made it almost ubiquitous. So that's like, this will also change some of the things. We have seen this account aggregators and Oken. These are the two networks which were there. They were waiting, or people were thinking that it is going to take a lot of time, but probably it won't take now so much of time because the ground realities have changed. So I think there is a new normal, and we will have no other choice but to embrace some of these things and move forward with that. And probably like Anshul and Ashish, they would like to add more to it.
Yeah, I'd love to sort of jump in. Right, it's interesting. When someone says, whether you want to redesign the business strategy for a new world. I mean, who knows what the new world is, right? I mean, it's really on the fly. You're continuously making changes as to what's happening in the ecosystem, what's happening around you. You take the opportunities that come across. And that you're able to capture. If there aren't any opportunities coming, you continuously keep trying to tap other opportunities and sort of take what comes to you, and you leave the rest to what's to sort of come. So I think it's one of those things where you have to continuously work on the business strategy. There is nothing like even a 12-month strategy you can set up and ensure that you want to stick to it. It's really set up a monthly goal and continue to work. You can set broad goals for the 12 months, but really every month you're changing what you're doing and adapting to what's happening around, right? So there's nothing like biding time and keeping ready for what things how things will be over the next few months. It's really take whatever is coming to you and hopes that things continue to work in your favor and you continue to adapt to what's happening around.
And to add to what Anshul mentioned, business world is never without uncertainty. COVID has been quite a big 10 sigma level event, a much blacker swan than we have seen in our time. But what if, we decide that it is a new normal and you start waiting for that after 6 months, you start building that. And by the time you have built and brought something to market in next 6 to 12 months, the reality may change. So a startup didn't have that sort of a luxury. We are not a corporate entity having millions of dollars of budget that we can sit idle for a certain time and bide our time. Paul Graham said that the startup is a business model all about speed, nothing else. So the speed has to be there. You cannot keep waiting that, okay, things will change, then I will have a 5-year plan and I will work on that. By the time you will launch, something new will come up. And so there is no one waiting for that. We all know that fundamentally things will remain the same, but how do we do that business, how the people participate in that fundamental ecosystem has changed completely. It has people's habit have changed. Let's try and build now. Take advantage of that, and the time is right now in your favor. If you build something based upon what people are going to do, you by the time others are ready, you will already win the market.
Thanks, Ashish. I think that's a distinct advantage that startups have, is that they are so agile and so adaptive. This time, if they can play and leverage it to their best advantages, I mean, they can shine through compared to the established guys. So moving on to the next question, I'll club these two questions together because we are running short of time. And Sandeep, I think you would be the best person to answer this. The question is, what is the deadline to apply for the fourth cohort by Monica? And the other one is by Govind Raj, about how many rounds of interviews will be there before the final selection.
So in terms of the deadline for application, also while we have formally not really set a deadline for us, it's really about getting adequate number of promising startups that we can accelerate. However, we believe that by end of this month we should have sufficient applications, from wonderful startups, and I think in a way a soft deadline would be end of this month. But then we are always open to some really radical and promising startups and solutions out there. So we wouldn't be looking at deadline as of now, but we already begun evaluating startups, and we are hoping to have the cohort at least start onboarding the next cohort sometime next month, right? So that's one part of the answer. In terms of the number of interviews and rounds, it's I mean, I wouldn't call it as an interview. I would rather call it as a discussion. So we will definitely get on at least one discussion with all the startups that are relevant to the program. However, for those that are more promising, at least there'll be 2 or 3 rounds of discussions that we will have with each startup before onboarding them, or before selecting them for the financial inclusion lab.
Thanks, Sandeep. So guys, in the interest of time, I'm going to end it at the next 2 questions, and that should be it. If you have any more questions, you can post it offline for us. Just the last 2 questions. Arun Kumar Tiwari has asked, and I'm just submitting this question: how can we provide better solutions to customers as compared to the competitors in, say, bill payments, recharges, or remittances? And how should we, if we try to cut prices and all those scenarios, so how should we decide upon what strategy we have to apply against our competitors? That's the question Arun has asked. Any one of you would like to take it up?
Sure.
So let me just.
Yeah, I mean, let me take a stab at it, right? At one level, really your solution depends on the insight that you have about the customer, right? Firstly, you have to select a specific target customer. You need to have that, and you have to solve for a specific need, and you have to have an insight on how that need needs to be defined and how the solution needs to be built. That is what will typically give you a differentiated product. And very importantly, I'm always talking of a customer, and what I am saying here is that it's extremely important to be customer centric when you are building your solution, and that will usually lead to a differentiation. Think about your differentiation. Know the market, because only when you know who your competitors are and you know their products, only then will you actually understand what differentiation needs to be built. So yeah, I mean, know the market, know your customer, and then build your solution. That is, a recommended way of building a product that's more differentiated. I mean, happy to discuss offline if you need more specific inputs.
Yeah, so Arun, you can push it offline as well. Going to the last question, and maybe Ashish would like to take a first stab at it. It's from Ayush, who's asking about looking at the tech gap in agribusiness firms between production and market level. farmers to firm, how do you look into the scalability of business if the B model is limited to B2B and not B to farmers?
Hi Ayush, great to connect. I was part of AIDEA, which is the agri incubator at NAM. So great to connect here. It's actually speaking, B2B model is good for startups in the sense that your cost of customer acquisition is low. So if you are working on agribusiness tech gap, filling up that gap, a better idea will be go to APOs who are at B2B level, try to see what you can do there. Tie up with them. It is easier to tie up with them. If you tie up with one and APO, you are actually indirectly working with thousands of farmers, hundreds or 2,000 of farmers together. If you try to acquire 1,000 farmers, it will be a huge journey, take a lot of time, and also the customer acquisition cost will be very. So much better model to do. At the same time, you can look at that. What are the other agribusinesses? You can take support of NAM into that. They can connect you to several businesses, and partnership models will work. Only problem in B2B businesses is that number of times you may have to work on white label solutions, which may not help create your brand visibility directly. But that helps in initial scaling. And after you have built up to the scale from B2B, then perhaps you can look at that. Can I take it to B2B2C model where I already have partners at B2B level? Then I can service to the farmers directly, and that way the brand visibility can come at a later stage. Very good model to work upon. If you want some more help on that, you can send me an email and I will be able to answer that as well. Sharing my email here
Thanks,
with you.
Ashish. Yeah, and also we'll distribute that with all the fellow participants later on. I'll leave it to the CICO team to kind of go through it. So thanks everybody for all your efforts, time spent, and the valuable answers that you have kind of answered in this session. Thanks to all the participants and the audience uh, to come spend an hour with us on a Friday morning, and hopefully you got insights as well. I would suggest everybody in the audience, especially, to keep a real lookout for what we are posting on social media as CICO, as Bharat Inclusion Initiative, and MSc for the Financial Inclusion Lab. And all the best to you guys. If you're planning to apply for the lab, please do so as soon as you can, and we'll start picking up the startups, as Sandeep said, on rolling. So once again, thank you everybody. Thanks a lot for your time, patience, and willingness to answer questions and project your ideas. We hope to see you around in the very near future. Thank you and take care.
Thank you, Anshul. Thank you, everyone else.
Thank you and stay safe.
Everyone, thanks KII for inviting us.
Thank you. Bye-bye.
Thank you. Bye.